Hello, good morning or good afternoon, wherever you are in the world. So it's been a couple of weeks since I've done one of these, so I just thought let's give it a go. Not getting any feedback, so just thought I'd do something to accommodate with my weekly market update. Obviously, the last couple of weeks have been really volatile. There's been a lot going on. You guys, you might need some reassurance. You might be all okay. You might want to find out a bit more, ask some questions. So this is an opportunity for me just to sort of adjust or address, sorry, what's been going on. And do please, contact me. A lot of you guys sometimes speak to me over the weekend. A lot of you guys just drop me a WhatsApp, ask me what's going on, ask me for my opinion. So I would really appreciate if more of you just started doing that. And let's just have some contact with each other. Okay. So last week, okay, stocks ended up higher, okay, climbing 1.4%. Okay, and that was after the Federal Reserve rate decision. Okay, so the S&P 500, okay, year to date is actually up 3.4%. So not very much. Had a good run at the start of the year. Dropped back down since the start of February. But actually, from October the 12th last year, which was its lowest, okay, it's up 11%. Okay, so if you invested at the start of October or middle of October, end of October to now, you'd be looking at into the S&P 500, you'd be looking at around 11% returns. And actually, even though it's 3.4% up year to date, it's still down 17.2% from its January 3rd, 2022 high. Okay, so still got a lot of room to grow. Really important. Take advantage of it now, get in while it's cheap and go up. A lot of turmoil going on in the banking system. Okay, a number of you have messaged me about SVB. A lot of you have messaged me with regards to Credit Suisse. Okay, it's made it a murkier outlook for the economy. Okay, what it does mean and what it has shown, though, with the likes of SVB in the US and the likes of Credit Suisse over in Switzerland, is that governments and central banks are prepared to back the banks if they need to. Okay, a couple of them have gone bust or have gone into liquidation, but are banks now too big to fail? So what does that mean for you as an investor? Well, is your capital still safe is probably the biggest question. Again, speak to me. I can give you a good breakdown of, where your capital is, what you could do to protect your capital further. Okay, and look at some other opportunities to try and maximize the protection on your money. Okay, the Fed said in its monetary policy statement that recent developments are likely to result in tighter credit conditions for households and businesses. Okay, that means lending is going to be a bit tighter. All right, the extent of this effect is uncertain. Okay, but Jerome Powell, he explained that the tightening in financial conditions would work in the same direction as rate tightening. Okay, maybe the equivalent of a rate hike or more. Okay, so really squeezing it, squeezing the market, and pulling people in, also cutting people out. Okay, that's how they're really trying to manipulate the market at this point. Uncertainty in the financial markets also puts downward pressure on stock prices. No one really knows what's going on. Banks are having a tough time. And actually, we can see that in bank deposits. Okay, so bank deposits fell from 98.4 billion down to 17.5 trillion in a week, ending the 15th of March. That was the biggest or the largest 1 week decline since April 2022. Okay. And deposits at small banks slumped 120 billion, while the top 25 largest firms rose almost 67 billion. So what we're seeing is people want more capital protection on their money. They're moving away from the smaller banks that have gone bust, and they're looking to take advantage of a big bank. Okay, and uncertainty regarding deposits. Banks seem likely to be more cautious in their lending. Okay, not sure what's going on with their deposits. Seen a huge run on deposits moving out, moving into other areas. They're not going to be just lending money anywhere. Okay, and speaking of bank lending, it jumped by 63.4 billion to 12.2 trillion. okay, during a week. Okay, so that's bank lending to bank. Okay, and that's, you know, we see with the likes of Credit Suisse, UBS providing $100 billion worth of liquidity to Credit Suisse. We've seen with SVB getting huge amount of liquidity pushed in. So let's see what happens. One thing is key: markets are due to go haywire. Okay, there's little known. Okay, and risk definitely in the markets, volatility. The one thing I would say is, right now, have you got more risk in the markets or more risk in the bank? Well, the one thing for certain in bank is, if you leave your cash there, it's going to, the buying power of your money is going to erode with inflation. Okay, right now, the opportunity is huge to buy into the market at a really low point. No, like I said, the S&P 500 is still down 17.2% from January last year. Okay, and it's up 3.4% this year. Huge opportunity there to get in. Story still unfolding. I'm going to try and keep you up to date as much as possible. You guys get a lot of emails from me, so maybe I'm going to do a bit more of this. Perhaps let me know. Okay, and yeah, I look forward to speaking to you soon. Have a good week. All right, thank you.